Happy Tuesday, 6/13/5/29 of 2012. Yes, it is. It's a 4-day week, and it's right after that wonderful Memorial Day yesterday. And how they come back, and do they want to bid the equities up? And we have what we call a pre-market opening gap at 6/13. The market opens. I've talked to the MMTs at length in pre-market futures and pre-market analysis of what things are going to do. On that 590 call, what you're going to want to do is mark it up, rises to 1050. Okay, rises to. You're also going to want to mark it down, falls to. In this case, if Google's going to be strong and trade up from Friday selling, capitulation down to the 588 area, is that it does have to mark itself up. So on the call side, we're going to be looking at those numbers. I've already given the numbers out on the 595, and these are weeklies, and there's 4 days into the weekly expiration. Holiday, end of month, portfolio money, does it come in or does it not? We'll find out. Here's a 575 call I just wanted to watch, but more importantly, I'm going to get over here to the 595 put. We have a $6 gap on the name. How to trade options weekly, monthly, or whatever, how to take the 595 put that was up, marked up 4.3 on Friday. It's a 6-1, and we know that in a shorter time frame that the put side of the market and the call side of the market were fairly imbalanced. Now, what I will say here, we will mark this put down, this 595 put. We'll mark our limit orders out there right now at $4.7. However, remember that that is the lower end of the market. There are upper markets. That's the lower end of the bid. There are alarms that you need to put. Falls to 7.6. Falls to in price. Now, there are markets that we would look at buying between 560 and 590 here. That is well below the close of 1060. And that is called wholesale, pal. And it's all based on the fact that you got a $6 gap in price, which takes this price down. We're going to mark to market the 600 put that would run from that gap, dollar gap sequence ratio, which marks this side of the market down. So what we will take a look at is when that opening bell starts in about 14 minutes, exactly the kind of markdown to the wholesale entry that we would be looking at the key resistance of that opening price gap resistance. And I'm not saying it again. It's how you would pull back and run up above there. And do you break that 599.35 cent range from that opening gap in 13 minutes? Which would take this $5 out of the money on day 1 of 4 days of the weekly expiration. And it would take the $600 put. It's going to take it down because it's going to go to the strike. And how much premium do they take from here? And gap resistance is where you make the transaction when they pull the premium here. And this is live right now with MMTs before the opening bell on how to start squaring off on a 4-day out of a 5 days expiration. It's called weekly. And it's called gap open up pre-market artificial price gaps. We got them all gapping up, just like I said yesterday. It's how they take this rally up into June 21. When normally that's when summer rallies occur, but then that would be the end of that great short cover. Does money want to come off the sideline? And are they going to discount the European crap? Who cares? It's about price action, resistance, called gap open resistance. done in the futures market that I told you about in yesterday's training and all the time that you have been here, how different futures artificially create higher prices to create an emotion out of you in the buy and sell transaction. How do I get this wholesale bid? Because this is going to be the wholesale bid side of the market from Friday selling. This side is now, the put side. The call side, well, we're going to see just how much of this premium that they marked down here, how much of this premium do they give back to the public. 6.87 marked down on a 5.90 call, yeah. 5.95 call, 5.84 pennies, $5.84 marked down. Oh, here's a 5.75 call that they marked down from $29.10, but they only had a high of 27 with the last print of 1975 with a $9.35 marked down. How much of that premium are they willing to give back to the public from the markdown area? And how much of this side, of the put side, and I have a 585 put right here, and I'm going to tell people this is one that we would look at. Yes, it's below the market. Yes, we would put a limit order out here right now at $1.20. Yeah. That's over $5 below the market, which takes out all my capital dollar frickin' risk to my entry. I remove dollar capital risk with wholesale entry. Welcome to pre-market. The rest of the news is as follows. And we're going to open up, and I'll just let you know on some of the gap open list. You can see here where the apples are gapped up. You can see Google's $4. You can see the price line that we featured, and we're all over that frickin' price line. As I said, this thing pays all day long, and we've already made a big hit on it, and we're making another one. Oh yes, we are. And I'm watching that 650 call like a hawk that was marked down $12.95 on Friday. Yeah, and I get to buy it wholesale and make money. The high was 23. The close was 26 last week. Yeah, I already own it. There's not that many of them traded, but we have got a few. The thing about it is how the rest of the MMTs could buy these. And once again, put rises too. Say if they mark it up to 1550, that would be the upper end. But also if they mark it down, it would be shallow. It's only going to be something like 1280. Okay? Because why do I say that? You can see that wonderful gap. See that gap? See that gap? Now, is it about taking equities higher into June 21, which is traditionally when summer rallies start to happen? We'll find out, but here's your gap up list. You got Win in here, you got the Bull gapping, you got Amazon gapping, you got the Baidu that we shorted from 135 all the way down and been going long off of the bottom every day as it's been bouncing from support levels. Yeah, it has. Makes good money. So that's your gap open up list. Your gap open down list on a NASDAQ composite, you got Veritox, VRTX. We've been buying it in pre-market. There's news on it. Look at the bear. It's gapping down at $1.41. Yeah. So you got the bear gap down and the bull gap up. That's in that range. So you know. And on the NYSE in the primary session, on the gap open up, where 60% of your program electronic high frequency takes place, IBI up 725, CEO, we make markets on it daily, CF, we love it, we make markets. There's a lot of upgrades in that sector today. Rio is up, once again, that MasterCard, we're all over it. All of these names, the EOGs, the BBLs, the CMGs, but most importantly is these beaten down commodity names that have been beaten down all year, is where you sell tech and start buying some of this stuff. Look at that BTU Energy up $1.02. Look at it. WLT. Look at it. CLF. Look at it. Cummins. Yeah. Caterpillar. Yes. Yes, yes, and more yeses, and more money, and more money, and more money. And the broad-based gap open up ratio says that while everyone remains pessimistic and we're going to open in 7 minutes. And all the training that we did yesterday is where do markets rally in anticipation to a summer rally, but then sell off, and how does that curveball come into play? It'll be verified in the price action. It'll be verified on the on-balance volume. Pre-market is over. That is what it is. Your gap opened down on the NYSE. You can take a look. It's very narrow range. So that bull is in play as we anticipate. But now we're going to see, because it's the end of the month, you got the jobs, you got all of that. Monthly jobs report again. You know that one? You're in the middle of the year going into June. And it's halfway through the point. You had the big bull rally. Now you've had your correction. And now you're going to gap up. Summer rally start after summer, which is June 21. But how does the market rally anticipation? You're not left out of it, and you get in it. You can tell by the gap today, the ratio gap, and all of these markets, that whole analysis that was told to you yesterday is actually in play and verifiable. Why the rest of the world is gapping down and everything else and all the problems that they have. One of the things was about the fear indicator, the VIX and the VXN, and how that they had made their big moves in the cycle, and how at some point that if these fear indicators, and I'll just show it here, we showed it yesterday, and those videos are being uploaded, but I don't have a lot of time to spend on it because we're going to open. So basically, when we come down and we hit support levels, then that means that equities will have their short-term higher gap open up level resistances coming into play in the price. So just remember, it's had a big rally, this fear indicator, and it's called NASDAQ 100 Volatility Index. And just a quick, brief recap on the one with the S&P, the VIX, the VIX.X. Well, yeah, we were very complacent within this 2012 period, as shown yesterday to all MMTs and market makers that work with SMF, naturally so. And here it was. And let me tell you something. Now that this thing had this ascending, well, this was the bottom of that fear, but let's just take a look at where the belly of it runs off of. It runs off of like that. That meant it was ascending and it was in its ranges. Okay? And we'll just kind of look at it. But listen, if we come down and land at support levels from this fear rally up, when this goes down, equities go higher. We covered it yesterday in depth, and it's time for you to be very hawkish at looking at it. So if we get support, that means equities on the gap open will be hitting their resistances right away, because this will have to daily keep coming down and falling in value to get back into the complacency area where there's no fear. And remember, elections, Greece, hey, all of that stuff is what it is. So what? It's about where the wholesale prices are going to be within the general belief of everyone involved in the stock market. And welcome to Tuesday, 6:27 a.m., 5/29/2012. MMTs, you know where the things are gapping up. You know where the verification models come into play. And we're going to have a good day.